Hello and welcome everyone to the Gold and Silver Club end of year commodity review and outlook for 2017, presented by myself, Phil Carr, at the Gold and Silver Club. Today we will be reviewing the recent developments in the commodity markets in 2016 and providing our outlook for the year ahead. The session will be covering the year in review, a summary of the biggest commodity trading opportunities in 2016, commodity market outlook for 2017 and key investment themes for the year ahead, portfolio performance, our top trades of the year using our exclusive research-driven strategies. Let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies and the agricultural markets, they are routinely sought by major financial television channels and publications which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial income through commodities using our exclusive research-driven strategies. For more information on the Gold and Silver Club and our expertise, please visit our website at www.thegoldandsilverclub.com. The year in review, a summary of the biggest commodity trading opportunities in 2016. Looking back at 2016, the year of big surprises, here is a summary of the most significant events and trends shaping the global financial markets in 2016. Global interest rates fall to 5,000-year lows. Central bank purchases of financial assets have topped 25 trillion. We had the Brexit vote this year where the British people voted to leave the European Union. The US election, so Donald Trump has won the 2016 election to formally be elected as the 45th president of the United States of America. We've also had OPEC and non-OPEC countries agreeing to historic oil output cuts. Oil prices rose to their highest level in a year and a half after both OPEC and non-OPEC producers agreed to output cuts for the first time since 2001. And of course, the US Federal Reserve, the Fed raising interest rates for the second time in a decade. Trading highlights, the biggest commodity trades of 2016. The EU referendum on the 23rd of June. On the 23rd of June 2016, the British people voted to leave the European Union. A bloc Britain joined more than 40 years ago after a historic referendum showed a 52% to 48% victory for the campaign to exit the EU. Following on from Brexit, the pound plunged to its lowest level in 31 years, falling to levels last seen during the 2008 financial crisis as Britain's shock vote to leave the European Union triggered turmoil across the global financial markets. Now, in contrast to the pound, we saw gold surge over 8% to hit a two-year high of 1,358 US dollars per ounce within minutes of the Brexit vote. Trading volumes on COMEX reached 8 times the average, and gold denominated in sterling soared a record 20% to £973. It was gold's biggest rally since 2008. The US presidential election on the 8th of November 2016. Trump's victory had a big impact on base metals. More specifically, Trump's $500 billion revamp of America boosted base metal prices following on from his election victory on November the 8th. Copper posted its biggest weekly gain on record, surging over 20%, whilst nickel prices jumped 27% and iron increased gains by 83% year to date. We saw zinc prices rally over 60% in 2016 to the highest level since October 2007 as US President-elect Donald Trump pledged to invest $500 billion in infrastructure and revitalize the US economy. Alongside the base metals, natural gas prices soared as President-elect Trump pledged to make America energy great again. Natural gas prices surged over 40% since the US election, hitting its highest level since December 2014. Natural gas price jumped as President-elect Donald Trump promised to revive the oil and gas industry and boost US energy exports. On the 30th of November 2016, OPEC announced a deal to cut production. After OPEC's first output cut in 8 years, oil prices soared to 16-month highs after jumping 9% to over $50 a barrel. Immediately following on from the announcement, Brent crude surged a further 4% in 24 hours to hit $54 a barrel, whilst WTI crude oil hit $52 per barrel. And ultimately, we saw oil prices increase by 100% following on from the January 2016 lows. Commodity market outlook for 2017 and key investment themes for the year ahead. The first market we will start off with is going to be gold, and it has been an incredible year for gold from the start of the year, where we saw essentially gold bottom out at the end of December following on from last year's FOMC statement and interest rate decision, where we then saw gold gain over 15% in the first quarter of 2016. We then of course saw over Brexit the biggest one-day move on gold in history, as it moved over 1,000 points from low to high off the back of Brexit. And then we also saw an incredible move here over the course of the US election, where it was the second biggest one-day move since 2008, which subsequently developed into a large bull trap, and we have seen gold correcting now since the US election. Now, where gold is poised right now, it is at a very critical juncture as we go into 2017. So last week we had the FOMC statement where the interest rate was increased by 0.25%, which was certainly expected and to a certain degree had already been priced into the markets. What really moved the markets afterwards was the overall optimism of the Fed and changing their forecast of 2 interest rate hikes in 2017 to 3 interest rate hikes in 2017, which subsequently we saw the US dollar breaking out to multi-year highs, and we've seen gold come back to retest major support near the 1100 zone, coming all the way down to $1,120 per ounce. So if we have a look at the price structure at the moment, it's very common to see gold consolidate over the last couple of weeks of the year as we come into the holiday period here. So where we are poised right now is that gold is sitting at $1,131 per ounce. Now, what is very noteworthy on gold is when gold forms a top, you'll see very large spikes in price, which then cause bull traps where essentially traders get in too high. They're getting in right at the top of the market, and you see these large corrections. That's very typical when gold produces a high. Now, when gold produces a bottom, often it's not the case that you get these moves. Normally, what you would expect to see in gold is a slow and steady consolidation, very similar to what we had actually going back to December of 2015, where the price continued to consolidate over the month of December, and then at the beginning of January is where we saw big inflows from money managers, and in particular we saw a lot of funds add to their positions right at the beginning of the year, the biggest inflows that we'd seen in over 3 years, and that was a catalyst for a large breakout here over the month of January and also into February. We saw very key resistance zones taken out at the beginning of 2016, where you see traders close out of their positions, close their books for the year over the last 2 weeks of December, only to re-enter fresh positions at the beginning of the year. This occurrence has happened the last 3 years in a row, and it's very common if you go back to the 30-year, 15-year and 5-year cycles on gold to see gold do this. So where we're poised right now, where gold is currently trading at $1,131 per ounce. So far, as we approach now the final week of December, we haven't breached the lows following on from the FOMC statement. We are continuing to hold around $1,130 per ounce. Now, this consolidation might well continue to go on throughout the Christmas period. So we are watching very closely here to see what gold is going to do as it comes towards the end of the year here. The next levels I would look at if we do see another washout move here on gold would be a breakdown to, first of all, a psychological level of support, which will be $1,100 per ounce. So if we break through $1,120, that is the next zone. I would then look for a move beyond that level down to $1,080. That was a very key level of resistance going back to November and December 2015. It was also a key level of support over July 2015 as well, just to the left of the chart. Now, on the flip side of that, I would also look for a possible consolidation setting up for a larger move here as we go into January. Typically, gold, when it bottoms out, it will consolidate and move sideways, form a basing pattern, and then you'll see big moves over 2 or 3 days. You'll suddenly see a big pop to the upside as traders and investors then decide it is time to buy this market. So if we continue to see gold hold on to its current level of support, trend sideways over the next week and a half, and start to form a basing pattern, we would be watching out for a break higher above that pattern as we move into the first quarter. Now, in terms of forecasts and what we expect to happen with gold over the next quarter and as we progress into 2017, essentially at this time of year, gold is vulnerable to more downside. It will either likely break down, have another washout move, or will consolidate sideways. But I would certainly look for the potential of a buying opportunity at the beginning of January, where often you see big inflows come into the markets at the start of the year, and that could be the catalyst gold really needs at this point from its oversold condition to break out higher. Now, in terms of a breakout to the upside, what I would be looking at for a retracement move here. Now, last year, gold broke out over 1,800 points in the first 6 weeks of the year. The major levels that we'll be looking at on gold if we were to see another retracement as we go into the first quarter, we would look to target $1,200 per ounce, and above that, taking the price up to approximately 1,250 to 1,270 US dollars. The time frame on that would be over the first 3 months of the year, so essentially the first quarter of 2017. It doesn't have to happen in the first couple of weeks. We would give that the first quarter of 2017 in order to get a retracement of this very oversold condition. Now, typically as we go into the spring, so from April through to June, this can be quite a weak time of year for the metals. I certainly wouldn't rule out the potential for another rally on the dollar and more weakness on the metals leading into the summer months. So I'm looking at the moment for a retracement trade to take advantage of over the first quarter, but then taking advantage also of selling opportunities on the metals too as we go into the summer months. And then ultimately what you want to be looking at is again further opportunities throughout the summer, which have often provided very explosive moves and great opportunities, not just gold but also silver as well. Silver, platinum, palladium, they've all been very lucrative markets over the summer months. Particularly, we get some great moves over the periods of August, September and October. So that is a time of year where we can take advantage of further moves with the precious metals. Now, most notably around that time of year is we have a number of FOMC statements. Particularly one of the biggest movers of the market is the September and the October FOMC statement. And of course, next year we will be watching very closely to see what the Fed does if they go ahead with the 3 interest rates which have been forecast for 2017. If they do go ahead with that, we'll see how much of that gets priced into the market. Prior to that, obviously, if the Fed doesn't go ahead with these interest rate hikes, this could also create a very interesting case for gold next year. Over the course of 2016, the Federal Reserve was expected to increase interest rates 4 times. This year, they only went ahead with 1 interest rate. So next year will be incredibly interesting. Of course, Donald Trump being elected as president is going to cause some fantastic opportunities for the commodity markets. We're expecting some very profitable months ahead here. And of course, if you'd like to find out more, the exact trades that we will be taking next year at the Gold and Silver Club, gain access to all of our services, make sure you stay on to the end of today's session and we will give you full details of how you can become a member of the Gold and Silver Club. Now, moving over to crude oil, for those of you who've been following our weekly reports for a while, you will be very aware of the trading opportunities that we've broken down for you in terms of the OPEC meetings that we've had over the course of September and also November. Both of those have been incredibly lucrative trading opportunities. Prior to those OPEC announcements, we've broken down for you the trade setups and opportunities that we've been looking at. Both times that has played out perfectly and generated some huge profits for us at the Gold and Silver Club. So again, if we just go back and have a look at those, we've had what is very common on oil throughout these OPEC announcements is a consolidation of price, ultimately ultimately leading into breakout trades here. We initially saw off the back of the OPEC meeting at the end of September, in one day we saw a 6% move for oil, and in the following week we saw over a 10% move, rallying back towards $52 per barrel. We also then were gifted with another opportunity to take another position here on oil after it corrected back down to the lows of November, and again just prior to the OPEC meeting we had another pennant formation, which provided us a fantastic opportunity to trade this breakout alongside confirmation that OPEC were going to reach an output deal. We had a perfect technical setup as well, taking advantage of the breakout and rally back towards $52 per barrel in one day, taking advantage of a 10% move, and we saw oil continue to rally over 14% over the next 3 days, ultimately breaking above $52 per barrel. And we've seen a breakout, in fact, all the way here up to $55 per barrel. And at the moment, as we approach the final week of the year, we can see oil is consolidating, but it is consolidating right at these major highs here. You will see where we have cleared above a major level of resistance, which is $52 per barrel. We've closed above that level last week. It looks like this week we're going to get another close, and ultimately the sentiment is in the favor of the bulls at the moment. We continue to see oil slowly but steadily go up in price. Now, the big question is, of course, how is oil going to perform over next year as we go into the first quarter and as we progress throughout next year as well? Now, certainly at the moment, if oil is able to keep up this current momentum, it has the potential to drift higher and move back towards $55 per barrel. And I would look at a move between $55 up to $60 here. So those are the next major levels we'll be targeting on the long side. Sentiment is bullish at the moment. Bear in mind, we could get a pullback, corrected pullback into the end of January, beginning of February, which will likely give an opportunity to re-add to positions here. Now, of course, we will be continuing to watch the fundamentals very closely here, especially regarding the output deal, which has been agreed now from OPEC and now also non-OPEC members as well. So that will have a significant impact going into 2017 for oil prices. And ultimately, over the course of 2017, we would certainly look for prices to achieve a high between $60 to $70 per barrel. But of course, each step of the way, you need to know how to trade it, how to take advantage of that, how to take advantage of buying and selling. So oil is the most heavily traded commodity in the whole world. So as such, it presents regular opportunities, not only on the buy side, of course. You want to be able to position yourself to take advantage of sell opportunities as well as buy opportunities. The liquidity on oil, the day-to-day volatility on this market makes it an incredibly lucrative market, and you don't want to miss out on these opportunities over 2017, particularly with Donald Trump as president. This is really going to provide some exceptional opportunities for the energies as we transition into next year. So again, if you'd like to find out more how to gain access to the specific trades that we will be taking at the Gold and Silver Club, how to join all of our private members and gain access to our full host of services, do make sure you stay on till the end of today's session, and we will provide you with full details of how you can make an application and become a member of the Gold and Silver Club. Portfolio performance, our top trades of the year using our exclusive research-driven strategies. Now, one of the most highly anticipated trading opportunities this year alongside the US election was, of course, Brexit. Now, this was a trade opportunity that we absolutely did not want to miss at the Gold and Silver Club. And as a result of that, we were rewarded for our efforts by profiting over 600 points on the Brexit breakout trade on gold. Now, more recently, we've had the US election, which has provided phenomenal opportunities for the base metals. Palladium, in fact, went on to rally over 25% over the month of November. Very simply, we caught this breakout trade from the beginning here, where we have taken advantage of a surge with over 720 points profit following on from the US election. Natural gas also provided us with a perfect opportunity to go long off the back of the US election, taking advantage of another breakout above the 2016 highs and banking 510 points profit. And of course, OPEC was another phenomenal trading opportunity, very fast move off the back of OPEC. So with that, we took advantage from the breakout trade, the surge in oil prices, over 10% move in one day, 14% move over 3 days, banking 460 points profit on this trade. Now, as we come to the end of the year, it's time to reflect and go through our portfolio and what we've achieved over 2016. So over this entire year, I hope you can see there have been some fantastic trading opportunities to take advantage of. We have benefited this year with 135% year-to-date return. So if you break that down over the last 12 months, we have been averaging 11% per month at the Gold and Silver Club by taking advantage of these very lucrative trading opportunities with commodities throughout 2016. I do hope some of you have benefited from our analysis, from the reports that we have been providing for you. And next year, certainly, we anticipate to be another very lucrative year. Would you like access to highly profitable live trade ideas shared with you, ready to implement for instant results? Whether you're a new trader looking to develop a solid understanding of the markets and fast track your results, or even if you're an experienced trader and you're looking to take your trading to that next level, then the private members live trading room is definitely for you. As a member of the private members live trading room, you get access to exclusive live trading room webinars. You can watch the Gold and Silver Club expert traders analyze the commodity markets right in front of you, picking out highly profitable trade setup, sharing exact entry, exit points, profit and stop loss targets, as well as walk you through live trade ideas ready to implement for instant results. You get access to real-time trade notifications alerting you when to enter a trade. All notifications include exact details of where to enter, exit, place a stop loss. All trade notifications are sent out in advance notice to ensure you have plenty of time to get into every single position at the best possible price to maximize profits. And of course, you get access to our commodity research and market insights. So private members get exclusive access to our proprietary trading research and market insights to help you boost your win rate and ensure you're on the right side of every trade. Our trading research is guaranteed to give you the ultimate edge in the commodity markets and fast track your results. The private members live trading room includes exclusive weekly live trading room webinars, live trade setups ready to implement for instant results. You get real-time trade notifications by email and SMS so you never miss a profitable trade. You get exact details of where to enter, exit and place your stop loss on each trade, a weekly trading plan with a watch list of trade ideas for the week ahead, live trade support to help you successfully through each trade, and institutional level trading research and commodity insights to give you the ultimate edge in the markets. To get exclusive access to our private members live trading room, please go to www.jointhegoldensilverclub.com. Complete the application form and we'll get in touch with you ASAP. So with that, we wish you a fantastic week, good trading, and of course we very much look forward to working with those of you who will be making an application and joining us at the Gold and Silver Club.